All right. Hello, everyone. Tim Davis coming to you guys with the market review. It's now early Monday morning, July 10th, 2023. Going to do this real quick. Show you guys just the current movement in market action according to technical analysis. I'm going to start off by looking at the VIX. Here's the daily chart of the VIX. And one thing I want to point out is that we have recently seen a move in the VIX daily chart back above the 50-day moving average. I'm sorry, the 20 per moving average. So we're back above our 20 per moving average on the VIX. The last time we seen that, the last time we dropped below the 20 per moving average was back at the beginning of June towards the end of July. So now we have to see, is this going to be sustainable? So we got that push of the VIX back above the 20 per moving average. So now the 20 per moving average should act as a level of support. So we got to see if that's what occurs. As we can see that on Friday, VIX pulled back quite significantly as we headed to the close, but we still managed to maintain a move above its 20 per moving average. So that's something to pay close attention to as we start a new trading week beginning this week. Look at the CCI. We are admitted to overbought territory in a big fashion on last week. So it's like we're starting to pull back just a little bit, but I do think that the VIX has a huge chance to stay above this 20 per moving average or above this level of support. Because once was resistance, now becomes support. So we should stay above that level of support. We have to see what happens. That is a look at the current, look at the VIX on the daily chart. Let's take a look at a weekly chart of the VIX. See how that looks as well. Here's a weekly chart of the VIX. One thing I'll point out right away is look at the full wins percentage on the wins percentage oscillators on this weekly chart. It started to move out of the oversold territory, and it's been in there for quite some time, folks. So we've been hanging around in this oversold territory all the way since April, actually since the end of March. Been in this oversold territory on the VIX weekly chart. We are just peeking our head out above that level. That could be extremely positive for the VIX and extremely negative for our overall markets. Keep that in mind. We got a tip out of our oversold territory on the CCI back in May, quickly dropped back below it. Now we got a strong move out of the oversold territory of CCI here beginning of July. That could be very, very interesting and very, very encouraging for the VIX and very discouraging for the overall market. So this could be a sign, folks, that the overall markets could be heading for troubled waters as we continue through the rest of the summer. We see how the weekly chart got a big push up towards its 20 per moving average and got a rejection back, but all indicators are showing that we could be seeing a rise, continuation of the rise in the VIX, and eventually a close above its 20 per moving average on the weekly chart. So that's something to pay close attention to. It looks like everything is in favor of the VIX as of right now. All right, let's switch straight to a weekly chart since we're looking at it of the S&P 500. And as we zoom in here, we're starting to see some weakness within the weekly chart of the S&P. So we've been in overbought territory for quite a bit. Looks like we are starting to, the oscillators are starting, and the full stochastics are starting to trend just a little lower. Oscillators and wins percentage about to head lower. And the CCI, like it's about to cross with a sell signal. That's the daily chart of the S&P. I'm gonna start this weekly chart of S&P. Now let's take a look at the daily chart of S&P. Here's a close-up look. Here we have some mixed signals as we hover right around a level of support. Looks like it wants to reverse. Look at the oscillators in the stochastics already heading out of the overbought territory with a sell signal. Oscillators in the wins percentage already out of overbought territory. CCI out of overbought territory as well. So all signs are pointing towards a possible break below its 20-period moving average on its daily chart of the S&P. That's negative for overall markets. Let's take a look at the Dow Jones. As we look at the Dow Jones, we see price action already took a little dip below its 20-period moving average. And now the 20-period moving average here, as you can see, just the opposite of what we just saw, it is acting as a level of resistance now. Got to move back up towards it on Friday and got a rejection. So we're hovering right just below the 20-period moving average on the daily chart of the Dow Jones. Oscillators and full stochastics heading lower. Wins percentage heading lower. CCI trending lower as well. Switch to a weekly chart. Look at a weekly chart of the Dow Jones. It looks bearish to me. It looks like it looks completely bearish. Look at the oscillators in the CCI has been trying its best to maintain a level above the overbought territory, but it's like this M formation pattern is forming. Normally, when you see that, it's signs that we could be heading lower. The full stochastic is already tipping out of the overbought territory. Wins percentage already tipping out of the overbought territory as well. So all indications here on the daily weekly chart looks like we are ready to head lower on the Dow. Take a look at the Nasdaq weekly chart. And if anyone has a lot more room to fall, I think it's the Nasdaq because it's been on a tear, and I do think it is ready to come out of this overbought territory. So this is a weekly chart. It's been trying its best to maintain its level, its head above this level of support, but I think it's going to find a way to falter and head back below that level. Look at the CCI; it's already starting to show a sell signal and starting to dip out of this overbought territory, as you can see right here. We've been overbought territory for quite a bit. Looking at the wins percentage, overbought territory quite a bit. Looking at the full stochastics, that could be about to unravel, folks. So keep that in mind. I do think that the Nasdaq has more room for movement to the downside. There's a big gap or big distance between price action and its 20-period moving average on this weekly chart. That's something to be mindful of. Switch over to a daily chart. And it looks like we got what looks to be some type of reversal pattern that's forming on a daily chart. Hovering just above its 20-period moving average, like we're ready to break that. Look at the oscillators and the full stochastic starting to trend lower. Wins percentage starting to trend lower. Look at the TTM squeeze. All these dark blue bars, one light blue bar, more dark blue bars, like the momentum is dying. The upside momentum is phasing out, and the downside momentum is like it's ready to pick up. Okay, that is our Nasdaq. Now let's switch over to the Russell 2000. And looking at the Russell, daily chart, it did its best to fight back after a big pullback below its 20 per moving average, but look what it did. Got that drop below its 20 per moving average, fought right back, but was unable to close above it, fell right back below it. So that is not positive. That is a negative for the overall. Look at the Russell. And oscillators are out of the overbought territory. And the full stochastics, as well as wins percentage and the CCI. CCI is trying to fight to go higher, but I think price action and this 20 per moving average is probably going to mute everything. They're probably going to stay. Possible chance that if Russell does not find a way to break back above this and close above the 20 per moving average before the end of this week, then we could see lower prices, and we can start to see the 20 per moving average continue to pull lower as price action will bump its head up against it, using it as a level of resistance. So that's what our major markets look like, folks. It does look like this summer could start to get a little rough for overall markets. What I will point out by looking at this Russell, and I am going to draw a level of resistance here. Level support here. I mean, what I want to point out here is it looks like this is a strong level of support here, but it looks like some type of M pattern. So if we break back below this level of support, you get just some lines in here. So we broke above this level back in the beginning of June. So it was resistance, then it became support. Then we made it up to this top portion up here, this level of resistance, pull back down to this level of support, which used to be resistance, bounce back up to this level of resistance, came back down to this level, forming what looks to be a possible M. Now, for some reason, we pull back down, test this level again and drop below it. All bets are off. We could see much lower prices. So keep that in mind. This level here is going to be a strong level of support. If we break that level, and we can see much lower prices in the near future. That is a look at the Russell. I'm gonna take a look at one more sector. Take a look at the crude oil, because crude oil has been trying to show some strength. So this is a daily chart of crude. What I want to point out with crude is that it has been trying to establish an uptrend, folks. Look at that. We're finally breaking above some levels of support here and trying to hold that level. So we're trying to break above this level of support and trying to hold it. We could expect a little pullback here in the near future, but we broke above this $73 level as we've been in a steady uptrend since about June 28th. Been in a steady uptrend, got back above 72 in March, right from 72 to 73. We've been staying below 72 for quite a bit. Got back above 72, made it 73. Now we see a slight pullback here, but all momentum is shifting in favor of the bulls. Looking at this daily chart of crude oil. Now we could see a pullback in the near future, but if we take a glance, let me get rid of some of these lines again. We'll take a glance at the weekly chart and show you guys what's shaping up there. Oh, didn't mean to do that. Here's a weekly chart of crude. And here it looks like the momentum is trying to shift in favor of the bulls as well. We got a test of the 20-period moving average on this weekly chart. All it needs is a little bump to push it up here. We get up around 75, and we can start to see crude prices head back towards 80. The oscillators in the stochastic is heading higher, trending higher, Williams percentage trending higher, and CCI trending higher on the weekly chart. So the crude could be a place to look for some bullish activity. All right, folks, that's all I have to offer you guys right now. Let's just see how things start to play out as we begin next week. Again, the VIX is at a possible turning point. Overall markets is at a possible turning point, as well as crude is at a possible turning point to the upside. All right, folks, hopefully this is some good information you guys can use, and I'll catch you guys sometime next week.